Good morning, traders. This is Michael coming to you from GammaEdge on Friday, November 22nd with our pre-market morning strategy and briefing session. As always, we start with the three pillars here at GammaEdge: sentiment, structure, and trend. We're currently looking at the market trend model. We continue to see the instantaneous bolded CT improve. That's our intraday trading overall tick indicator. We do see the moving averages continue to improve also. We are now emerging into the colored ribbon, which is an area historically where we can see some consolidation or we can see some failure, but we'll continue to watch this really closely. What we want to see is the bolded CT emerge above the cyan line. Again, that would start to give us positive slopes on the red and cyan, which is our longer term market trend model ribbon. As of now, we're still in a bearish state on the long-term ribbon. We are in a bullish state on the bolded CT, which is our intraday, and then the moving averages, railroad track moving averages, as we call them here, and that's our 1 to 3 day look of the overall tick. So again, we'll continue to watch this day over day, see if there is some sort of failure, or if we continue to merge on the other side of the colored ribbon and start changing this to a bullish long-term state. The tick US, we did see institutions involved slightly yesterday. We do see market breadth improving via the green lows versus highs. So we have new highs now outpacing new lows pretty significantly yesterday. So again, we'll continue to watch to see if institutions are involved via the filtered cumulative tick, which is our plus 1,000, minus 1,000 filter. And then the overall CT was at 141,000 yesterday. So a decent amount of buying in the overall market. Jumping right in, market trend model summary. We do see that the short term and midterm continue higher. We do see the red below cyan still, so that is still the bearish state of a long term, but improvement in the bolded CT and the railroad track moving averages. Jumping into the SPXP, all expiries turned on. We're still call dominated above and below spot price. Very narrow transition today, 59.25 to 59.50. We do see PGX and COI still at 6,000. That would be that upper area target. If we get above 59.50 and stay there, I'd anticipate us to traverse towards that 6,000, maybe not today, but into next week possibly. And then we do see some OTM call speculation continue to increase above that 6,000 level. So again, we could just continue to grind up towards that level. On the lower side, if we're below the 59.25 area, I anticipate some sort of pullback towards 5,900. That's really kind of been that range we've been stuck in the past few days, with gap down in the morning or sell off in the morning back towards that 5,900, 5,925 level, and then a quick recovery and back to the upside towards that upper area of 5,950, where we again continue to stall. So if we're above 5,950 at the open, I look for us to move towards 5,975 and then ultimately towards that 6,000, possibly towards the beginning of next week. The SPX full complex summary here: call dominated above and below spot price, prior day call dominated, so that doesn't really change. We do see the net GEX continue to grow, which is bullish, and the GEX ratio continues to move up also. We see all the transitions moving up, which is also bullish in the overall structure and sentiment. Zero DTE, we do see a narrow transition here at 59.20 to 59.25. Again, we're above that pre-market. So again, staying above that would give us the bullish look. We see 59.75 up there on the zero DT, which I've discussed. Drunken sailor range here at 5,900 to 5,950, and then upper area towards that 5,950 would be, or 5,975 would probably be the thesis if we're above 5,950. We see COI again up there at 6,000. So confluence on the all expiries and zero DT for a move up towards that 6,000 level. To the downside, if we're below, again, 59.25, 59.20, as I discussed the transition, I'd look to pull down towards that 5,900 or the bottom of the drunken sailor range. Just remember, again, as I stated yesterday, when you're within drunken sailor range, you are just overall at the mercy of zero DT trading, and the market wins. That could be charm if you're going sideways. That could be just the mechanical opening, closing of intraday contracts by market participants. So that's why we watch the volume command very intently to see where market participants and the volume basically are targeting on specific strikes. And that usually gives us a decent amount of clarity on the direction that the market's going to go. So again, we'll watch that intently today. SPX net stat command. Obviously 6,000, 59.75, the upper strike there for charm. Net delta 6,000. There are some in the money puts up there. So a move up towards that level, we'd anticipate some sort of stalling. On the downside, a pullback towards 59.25, 5900 again would be that lower bound that would give us an opportunity to get involved. You see the in the money calls almost 3 times the in the money puts above us. So again, these will continue to grow as long as we're above 5,900 on the charm side, and just continue to be supportive and demand type action on any pullback in the overall structure. The SPX 0DT, the summary here, sorry, is call dominated in the left-hand plane. The right-hand plane, we're still seeing that put dominated. We'd like to see that change, at least at the open today. If that does, then that would give us the opportunity to move up towards that 59.75 or 6,000 level. It's just what we've seen the past few days is that right-hand plane with the OTM call speculation just wanes, which does not really bode well for price continuing above that 59.50 level. We do see net GEX continue to improve. Obviously, that's bullish. And then the expected move dropping a little bit, which is also lower volatility heading into today. We see transition continue to improve day over day. DEX transition, drunken sailor range, all these continue to improve. We did see COI only drop by 100, but plus GEX and minus GEX continue to move up also, which is also bullish and gives us the thesis of price and spot price moving higher within the overall sentiment and structure. The +1 DTE call dominated above and below spot price. This is obviously Monday. We do see the transition expand slightly, so uncertainty there into Monday. But again, confluence of the same levels, 6,000 PGEX there, and then INGEX at 59.20. That's really, again, why any pullback I would look to get involved unless we see the MTM and vol-M completely change. But as we've seen the past few days, any sort of gap down or pullback towards that 59.25 or 5,900 has been a good opportunity to get involved on the long side. So we'll continue to monitor that throughout the day and see if it provides an opportunity at the open. And the balance of next week, this is obviously through Thanksgiving. We're anticipating obviously lower volume through the holidays, but again, transition the same. PGEX up there at 6,000. So any change in the overall structure probably will not be significant. That's why I would anticipate us, if we're above 59.50, to move towards 59.75, and then obviously just maybe grind up towards 6,000 in a lower volume environment with market participants continuing to drop off and head out for the holidays. So, all right. So thesis for today. Let's go ahead and jump right into that. SPX pre-market looks like 59.45 so far. So again, above that 59.50 will be important at the open. So drawing the drunken sailor range in here, 59.50 down towards 5,900. Really intently watch that 59.25 on any pullback. Also, that's been a previous TA area that's also been important. And again, above 59.50. And if we take out the high of the day, previous high of the day, around 59.60 or 62, I'd anticipate us to grind up towards 59.75. And then if we do have some OTM call speculation today, then obviously moving up towards plus GEX at 6,000 would probably be the likely target. Again, to the downside, if we do lose 5,900, I'd look back towards this multiple day TA gamma delta level down towards 58.50. That's been very, very supportive and a significant demand area. So overall, that will be how I'll be trading today and looking at the sentiment and structure. So P2P, we are closing Costco today for very nice gains, up over 7%, which is good. TC3 Plus is still off, so we'll not be entering any trades yet on the P2P. Hoping for the bolded CT and railroad tracks to emerge above that colored ribbon for us to give us an opportunity to start executing that strategy again also. All right, that's it. Everybody make it a great Friday. We'll see you in the Discord in a few minutes. Thanks.